Welcome to a special pre-market edition of the weekly swing low. It's February 28th, 2025, the last day of February. We have a monthly candle closing, and we're recording this about 8 minutes after the jobs report, the non-farm payroll report. I don't actually even know what the number is, funny enough, but we're going to focus on the price action. That's the whole point, right? And so this is ES since the market isn't open yet, and we'll look at the daily chart. Actually, let's take a step back first and look at SPY. So, spot like to think about where we are in the daily cycle, right? So, we topped out on day 25, right here, and so we are currently on day 31. So that's important because at some point we're going to get a daily cycle low, right? Like, so you don't want to be like, that's why you don't want to be chasing shorts. But we've only had like a 6-day decline so far. We had a 25-day rally. Doesn't mean this has to be left translated. Doesn't mean we have to decline for at least 25 days. But it tells you the decline probably is going to be more like more than 6 days, right? And so it's really a question of, are we going to get our little rally off this non-farm payroll report? But maybe a lower high. That would be my expectation if we are going to get a rally at all. We're going to look at that micro price action in a bit. But this is your big candle, your big range. That level, the level you want to pay attention to. The high is 598 and the low is 584. So that is a gigantic range, right? 14 points. So all that to say, we could see some price action inside that range, and it is kind of meaningless because you're still just chopping around. This is essentially a bear flag, albeit later in a daily cycle. So you would expect that you're going to at least get your daily cycle rally soon. But if you look at the weekly, this is the thing that's more concerning, right? This looks like a weekly cycle that topped out on week 5. And so that's more important than the daily cycle, right? This last weekly cycle rallied for 17 weeks and then declined for 6 weeks. We made a big bottom on week 26 here. And then we just kind of traded sideways a little bit as we opened a new weekly cycle. We talked about how we wasted time essentially. So we made this little higher high last week, and then we got the pattern that we were looking for from the last update, right? This is a compound bearish outside candle. I mean, I'll just draw, you can kind of see, if you just draw one candle, these two candles completely take out the range of these two candles, right? So we got the downside that we were looking for, this break below this low here, and quite a bit more, and so wouldn't be surprising if you get at least a little bit of a rally here. Now, the real question would be, is this a daily cycle low? Is this enough? The bull case would be that this is just a retracement in the weekly cycle, and this is not the top on week 5, and we're going to go on to make a higher high, right? Like if you look at this right here, this is a great example actually, right? Like this was a little you had this was a weak, this was a tough week to be long, right? This long lower wick means this was deeply red at one point. And then you come back and finish the job the next week, but then you went on to rally, right? Like this reversed. In this case, you have 2 red weeks in a row. We're going to see what price action happens so just to be clear, this weekly candle opened at 602. So we'd have to get back above 602 to be green. That's not going to happen today, obviously. And so we're going to have 2 red weeks, but it's a question of, is that going to, the bull case would be that's just a little retracement like this. The bear case, again, obviously, is that this is actually the beginning of a longer decline, and we're going to break below this low at 575, which we talked already about the fact that 584 was the bottom of the range here. So if you break down below there, a decisive close below 584, then that could send you down to test this 575. And then it's a question of how deep does she go, right? And most importantly, as important as the weekly cycle is, think about this daily cycle, this long-term cycle, which I've been harping about. It's getting long in the tooth. Look at this. This was our bear market low back in October 2022, right? This is month 28 of that rally. That's a long rally, right? Like at some point, we're going to get either a multi-month decline or a multi-month consolidation, sort of sideways-ish. Look at the shape of this candle. The monthly candle has gone red. Now, importantly, we're still inside the range of the previous candle. So we keep talking about this on this channel, and it's super important to understand how like that pattern of the bearish outside candle or the bullish outside candle, it exists on all time frames. We're now setting up a bearish outside candle on the monthly time frame. Now, it's the last day of the month. And so if we're getting this, if we're going to get a little rally off this non-farm payroll thing, then we're not going to make that lower low. And, to be clear, that 575 level that we were looking at on the weekly, right? That level, that's the low here, right? That's the multiple time frame analysis. It's so important to understand. And so all that to say, my expectation would be that we get a compound bearish outside candle on the monthly, the same way we did on this weekly candle, right? This candle ran out of time, and so we came down and made that lower low the following week. I suspect we're going to do the same thing on the monthly level to break down below this 575. Now, that could go to either one of two ways. We could get a violent rally off that, a sort of false breakdown off of this low, or that could be the beginning of something much more severe, much more long lasting. But that is my expectation, and we'll see how we play out. That would imply that the weekly cycle continues to decline. Maybe we get a little weekly cycle, a little daily cycle bounce before we resume lower. And so we're going to open on Monday, depending on how we close today, obviously, probably inside the range of this monthly candle, which again, that low is 584. And so that's what you're going to be watching for as we open March. How are we looking on this monthly level? So now let's look at the actual live price action. We're at 845. So we're one full 15-minute candle since the jobs report has been released. And let me use my other setup. Like, this is the setup I use for looking at ES sort of intraday. And so if we look at the daily chart of ES, I'll zoom into this one. It looks very similar to SPY, obviously, but it trades for longer. And so you'll see like slightly different patterns. But I mean, look at these upper wicks, right? Just tough to stay long. Like, it's been, I mean, tough to be short, I should say, because you have these like violent rallies, right? Like, that's what these upper wicks are, right? But right now we're shaping up to have a little hammer of a candle on the daily chart. This is your daily chart. And so the low for this candle here is, let's see. So you want to stay above that low there, so around 58.74. So this isn't going to be the same level on SPY. It's going to be a different level because this is the futures trade, like, but this is what's trading like literally right now and reacting to the non-farm payrolls number. So that's your daily chart. So it's the same pattern for SPY. I mean, if we zoom out to the weekly, it's the same pattern on the weekly, right? You have that. Last week we didn't make that lower low, and then we came in and we made that lower low below this cluster of lows here. And on SPY, that level down here would be like just below 5,800, like just around 5808 would be this low on the weekly level, which is going to correspond to your monthly low as well. But zooming in on the sort of micro price action, since we reported the number, let's zoom into a 15-minute chart. So if you can see, like, this is your 15-minute chart of SPY, big waterfall decline, and now we're just building a base down here, right? These are all little 15-minute candles. This is all overnight action. What is this? Yeah, this is all like overnight. And so this was the candle where we reported the jobs number. And so we actually made a higher high. So this, like, you can see this, we were making lower lows. We made a higher high above by getting above 588.90, or excuse me, 58.89. So you want to watch that. But then we pulled back, this upper wick, and now we're just consolidating inside that range. And so at this point, it's like everything between 58.84 and 58.99 is essentially chop, right now, this definitely has a bullish lean. We're just an inside candle on this next 15-minute. And if we zoom in, like if you like really zoom in, this is your 30-second chart. This is the boom, right? This is the 30-second candle when the jobs report was released. And you can see next 30-second candle followed through higher high, higher high, higher high. We're now just consolidating. Look at that. This is just a nice little bull flag, right? Again, this is on like the smallest of time frames, right? Like this is literally a 30-second price chart. But again, multiple time frame analysis. This little bull flag is the upper wick on that 15-minute chart. And right now we're opening this new 15-minute candle. So you want to kind of, you could even kind of zoom in here and watch that. And so let's go through the other tickers, see where they are. So bigger picture, obviously ES has been like cascading lower. And so we could rally a little bit today. We're already trying. We have a little green hammer. Just watch for that lower high, for that swing high to send us back down. It's really a question of, is this actually a little daily cycle bounce, or is the daily cycle still declining? That's the big question. So let's look at the rest of the tickers quickly. Again, knowing that they're all in daily cycle decline, let's look at the actual kind of details. So for QQQ, oh man, everything is just looking really ugly out there, folks. Oh man. So for QQQ, that Thursday candle is the range is a high of 519 and a low of 500. So a 19-point range, gigantic. Yikes. Same pattern here, but for the Qs, importantly, we're actually so the low for the previous weekly cycle is 499.70, and so we're not quite there. We're at 500. So watch that. We're a hair away from that 499.70. So we're like 30. Well, we're like $1.30 away from breaking below the previous weekly cycle low. That is a really big signal. Not a good one, obviously, right? Like notice, like this weekly cycle stayed above this one and stayed above that one and stayed above that and this stayed above that one. Breaking down, another way of saying, like that means we're making a lower low on the monthly chart, which again has implications. This long 28-month rally it's very likely that it's over, right? And the next like clear kind of level that you're looking at is around 483. Now that we may get a daily cycle rally before we see that. So that's important. You got to like this thing has been declining. Like, let's see, what is the percentage decline in the last, like this is a pretty waterfall decline. So it feels like a snapback is, so we're already down 7% in like, less than 2 weeks. That's a pretty fast move, actually. So I would like, even as we see the weekly cycle continue to decline, like remember there's going to be a daily cycle advance in between that. And if we look at the ratio, not surprisingly, the ratio of QQQ to SPY is declining as well. That's what we would expect. The Dow is clearly putting in a decline as well. For the Dow, that next weekly cycle level is 417. So that's quite a bit lower from here. I would expect it's going to get dragged down with everything else. Again, there may be a weekly cycle rally in between here and there. And I would say for this, you've got to get above this cluster of lows here in terms of bullish reaction. Like you would like 439. I could see a world where we get a rally that can't make it past 439. So if one were inclined to get long here, that would be like your kind of take profit zone in my mind. So that's QQQ. Or excuse me, the DIA. Let's look at IWM. Oof, man. Again, all bad news bears here. For IWM, we have this multi-month consolidation range. We're now threatening to break to the lower side of it, which would get us back closer to 200, which I think we've kind of talked about. And on the monthly chart, oof. So we're already below look at that. We're already below last month's low. That makes November a big swing high now, right? Like boom. So November is when we made our last all-time high on this thing, and the low for November is 217. So closing below 217 on this month, which looks like we're definitely going to do, is definitely going to happen, makes November a swing high and potentially a long-term cycle high for IWM. It doesn't mean it has to be a crazy bear, but at the very least, you see price finding its way down to the 200 area, the bot like into this range here. Yikes. Well, at least that's a pretty clear signal, though. Nice when things declare themselves. So SMH, again, not going to belabor the point here. All very similar price action. For this one, this Thursday range is 246 to 228, 229, call it. Again, all gigantic ranges. You're going to just so don't chase price here. What about Dixie? What is Dixie? Oh, and just before we move on to that, SMH on the monthly level, we've talked about how this consolidation at some point was going to break. Notice what's happening here. Like, if one has a keen eye, we made our high back on in July, actually, right? And everything since has just been consolidation below that high. Now we could burst above, and that's what, there's still time for that. We're not like there's no reason that like that could still happen, but as it stands now, this could be your long-term cycle top. Right, that's something that you want to be paying attention to. Like I certainly am. That's interesting the way this is sort of shaping up. And to be very clear, this candle has a low of 227. Right, so if we're breaking down sustainably below 227, this is now becoming like this whole period was actually just a bear consolidation potentially, possibly. That's what we're going to be watching for. So be careful out there. I'll be watching that closely. What is the Dixie doing? So Dixie made a daily cycle low. That's what the Dixie is doing. So that makes sense. As the markets have their bear period, Dixie rallies. So that's a daily cycle low on day 22 is what this looks like. That was Wednesday. And we're now on day 2 of a new daily cycle. Now that could also be a new weekly cycle as well. This is shaping up to be so we're going to make a bullish outside daily candle. If we don't complete it today, we'll probably get the compound bullish outside candle, right? So we made a lower low below this low, and now we're going to make a higher high. Above 107.38 would do it. We're not quite there yet, but that would be the expectation, and that would make this your ICL candidate, your weekly cycle low. 22. So it's actually week 22. Like that's definitely within the range of what you might see for a weekly cycle decline. Doesn't mean things have to go on a certain schedule by any means, though. Don't take that line of thinking either. So tactically, this thing is set up for a little rally here. And what about the U.S. 10-year? That is not showing signs of bottoming. Like it's been moving in tandem with Dixie, but it's not showing signs of bottoming any now. 18, 19, 20, 21, 22. So it's week 23, but unlike Dixie, we're not seeing any signs of any makings of a swing low. In fact, this thing needs to close back above 4.58 to make a weekly swing low, and we're down here at 4.29. Like that would be a huge move back up. So like yields are taking a real beating here to going lower, which means TLT is going higher, right? So we talked about, I forget if I tweeted about this, but in the last update, we talked about how like the real question was, is this a weekly cycle low? It's starting to look like it was a weekly cycle low, and that makes this week 6. We talked about how this wick gave you a nice little risk reward, and then you on top of that, we got this little this little higher high, right? Like this, or excuse me, this higher low, right? This low here, right? Higher than this low. So all of a sudden you can move your stop here. It gives you a better risk entry. And now we're getting some follow through. We're getting some pullback here. But this is potentially week 6. And, you would expect we at least get back to this high here at 87, 89, call it 80, or excuse me, wait, that's not. That's not right. Where is that? That would be in the 94 range. So that's TLT. I did skip over oil really quickly, and actually, just before I do that, for TLT, just be aware there is a gap between $90.12 and 90.75. This thing loves to backfill, and so just be aware of that. A better entry would probably be wait for this gap to fill, tactically speaking. That's TLT. Let's look at oil. We'll go through the rest quicker now. So oil is just continuing its slide down to the lower end of the range in that 66 neighborhood is my guess. Nothing to really see here, folks. I mean, look at this thing. It's just like, and importantly, setting up to close as a swing high on the monthly chart. That's really important. So closing below 68.39 makes this thing a swing high. Look at this big upper wick on this, which is of course a lower high to this high and a lower high to this high. All that to say, this thing is in a long term, is in a downtrend, right? Like bigger picture, nothing to see here, folks. So that's oil. TBT is going to be doing the opposite of TLT. So this is in weekly cycle decline right now. So similar, just kind of moving in the same direction as yields. Bitcoin. So let's look at crypto. Yikes. So this thing has broken down. We've been talking about how, look at this massive bull flag. Well, the reality is flags can break either way, right? Because all this is a consolidation. I definitely was expecting it to break up before it broke down, but here we are, right? We have this rally here. Like if I think about this, like just kind of think about it from here to here, that's a big rally. That's $32,000. And so that still, like that would get us back down to, if we just like erased that rally, that gets us back to, like in the 69,000 range, which doesn't seem crazy now that we're down here at 81. But at this point, just like anything else, you're watching for that swing low, right? Like just if we look on the daily chart, a close above 90. Wow, we have to get back above 97,000 basically to give ourselves a daily swing low. So let's zoom in on a lower time frame. So we're making a little swing low on the 4-hour chart. Problem is we did that before, like here, and that failed. We did that here, and that failed, right? And so if you want to be really tactical, it's a 4-hour swing that I would play. But again, just be aware that like these things can and do fail. But that's what stops are for, right? That's why you look for an entry. Like that's why you look for an entry that gives you a good risk reward in terms of a logical stop. But bigger picture, like on that daily, we talked about how these wicks tend to get revisited, and now we're back below that wick. This is declining in a daily cycle. There's not much more. Like we have to wait for a swing low on a lower time frame. Same thing for ETH. ETH hasn't quite ETH hasn't quite broken down below the wick yet, but that seems to be only a matter of time. So below that 2150 level, and we could see a protracted period even below 2000. Again, same idea. Got to wait for that swing low. We're seeing one here on the 4-hour chart. We'll have to see if the broader market can rally as well. That could give this thing a chance to bounce. What about gold? Gold is finally pulling back after this relentless move, refusing to drop into a traditional like a what you would expect as a traditional daily cycle decline. And so we're finally getting that, right? Like it took a while, but this thing rallied for 47 days for all intents and purposes. And now we're getting a very clear, we had this lower low and then consolidation, and then this makes a lower low below these lows. And so that becomes a line in the sand around the 2888 area, right? Because you can imagine, let's say like Monday, we get a candle like this. That's a swing low, right? Like above here. So that's what you're looking for. It's very simple. It's not complicated. Right now, that level is 28.88. It's going to be a moving target as this thing continues to decline, or obviously if we get a rally, the opposite. And on the weekly chart, this is is it a bearish outside candle? Let's see. That's 29.56. I think it is, right? I mean, if it's not quite, it's the same spirit, right? Price started a little rally and then just failed and is now making a lower low. Again, similar to the S&P, the implication here is this a little retracement in the weekly cycle or a bigger decline? I think gold has a bigger chance for this to be a retracement instead of a bigger decline, but we'll have to see how that plays out. And it's month 28 in the long-term 8-year cycle. Silver, same kind of thing. For silver, we need to close above 32.76 to give ourselves a daily swing low. And the swing high level on the weekly chart is below 30.96. GDX going to be doing the same thing as these guys. So for GDX, needs to close above 42 bucks to give yourselves a daily swing low. But again, that's going to be a moving target. Again, this thing has every chance for this little weekly cycle, this little decline to not be a full weekly cycle decline, but just be a smaller retracement, a higher low. But again, we'll have to see if that's how it plays out. And that means things like palladium are doing a similar thing. Yikes. So yeah, I mean, that's just ugly, right? Like this thing, palladium is now, it looks like it's targeting like below these lows. So like talking like the 800 range. And what about natural gas? We'll close it out with that one. So natural gas looks like it made a top for the week daily cycle after rallying for, how long is that? For 14 days, right? That's a relatively short rally. And if we look at the weekly cycle, on the weekly chart, this is all just an inside week. The range is a high at, let's see, call it 450 and a low at 367. So pretty wide range to be sure. But right now, there's really no signal. I mean, you just have a a red inside week shooter, right? And that's not good. So that's the update for today. Let's just swing back really quickly to ES, see what ES is doing. Let's see, has our little bear flag broken down? This is our little 30-second bear flag that we set up a long time, or excuse me, our bull flag, and look at that thing. She has broken down, right? Like if we extended this barrier, it's just been trending lower, which is to say this little rally that ensued after the report is now starting to evaporate, right? So gotta hold. The immediate line in the sand right now becomes, it depends when I'm posting, this is 9:06 right now. I'm gonna post this video shortly. Becomes 58.83, call it, right? Like if it can hold above that low, this actually becomes this is actually kind of an attractive entry, right? Like the risk reward here isn't terrible, right? All right, well, thanks for watching.